Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Josef Schachter, founder of the Schachter Energy Report online at SchachterEnergyReport.ca. He's speaking to us from Calgary. Welcome back to the show, Josef.
My pleasure. Good to be with you again.
Josef, crude oil, the overall market action and the recent down leg, how far can we go down?
Well, we've recovered to $30 U.S. for the June contract on a number of things. One, OPEC talking about their complying, effective May 1st with the big cut of, 9.7 million barrels. And then Saudi putting out a release that they're going to cut another million on top of that for June 1st. So the market is getting optimistic that we're starting to see those cuts coming through, which are going to, hopefully stabilize the numbers. At the same time, we're getting good pickup in the States where the U.S. Demand is picking up. A couple weeks ago it was down to, the 13 million level. It was up by 1.46 million barrels this week, or 9.5%. Bigger increase was with finished motor gasoline, which was 7.4 million, up from 6.6. So, up 11%. The one that's still problematic is jet fuel. Jet fuel fell 32% to 352,000 barrels a day from 515. So people don't want to fly in planes, but if they're going in a car with their family members, they're comfortable doing it. So we were at 21.9 million at the high. So even though we're at 16.8, we're still looking at almost a 5 million barrel difference between where we are today in terms of demand and where we were before the COVID-19 hit in March. So, and finished motor gasoline at the time was 9.4 million, and now we're just under 7.4. So there's still about a 2 million barrel lower level of usage in the States today in gasoline. But again, that number is up because we are seeing more, I think, 42 or 43 of the U.S. states have now reopened, and so people are going in their cars, going shopping, driving around, and that portion, gasoline and diesel, will go up. Jet fuel is the long-term problem because until people get comfortable going on planes again, and you either need a cure, or you're going to need a vaccine, or you're going to need to know safety protocols are going to be extensive in terms of temperature testing before you go on the flight, as well as wearing masks. But I think jet fuel is going to be the last part of the commodity product from energy that's going to come back.
What's going on with oil prices and then natural gas prices?
Well, oil prices are today, as I mentioned, we're around $29 for June, so it's gone up because of the announcements from the Saudis. $29.20 was the last price that I just saw. But natural gas is around $167 in the U.S. For NYMEX, and I think we're in the 180s for AECO. Natural gas is benefiting because the amount of drilling going on for oil, a lot of wells have the byproduct of natural gas, and with the significant cuts that we're seeing in the drill count and in well counts, the Baker Hughes drilling data came down again today, and those numbers were much weaker. Just pulled them out here for you. Pulled them out about 10 minutes ago. The U.S. rig count fell by 35 rigs in the States to 339. And that's down from 987 rigs a year ago, down 66%. Canada lost 3 rigs. We're now 23 rigs working at this time of year, down from 63 a year ago. That's down 63%. So we're really looking at an industry that's closing down in both sides of the border, which means depletion kicks in. The productivity of the wells, the pressure goes down and the productivity goes down. So we're going to probably see production continue to go down. U.S. production from where it was in March to now is down about 1.5 million barrels a day, and it's likely to go down. I think, we lost 300,000 barrels last week to 11.6 million of crude production. My guess is we're going to see that number below 11 million before the end of June and potentially down to 10 million by the fall. So you've got demand starting to recover, which is positive. You've got production coming down, both in OPEC and non-OPEC. The problem is there's a gap that's pretty significant, and the question is storage. This week, because U.S. Inventories from the EIA didn't grow, they came down a slight amount, down 700,000. People got optimistic that everything's okay, but the key problem is a lot of the oil that's coming in and is now being put on ships, and the amount of tanker that are offshore Singapore, the Gulf of Mexico, L.A., etc., is at record levels, and almost every ship is now being used. And onshore storage, there's still a bit to come. But once that fills up, and that could, be during May, June, I think we're going to see somewhat weaker prices. I think sometime in the next month or two, that $29 oil price may go down below 10 again, and that's going to provide us another great buying opportunity like we got in mid-March. Negative oil pricing like that -40 because of hedge funds and because of that UCO commodity or that ETF in the States, which caused a lot of problems. And because of storage issues, it went big negative. I'm not sure we're going to see negative again, but we could see, below $10 WTI sometime in the next month or two, and that will then drive stocks lower. And I think the TSX Energy Index has downside. So we're telling people, hold off being a buyer now. Let's wait till we have the next low-risk buying opportunity. And when we see that, then take advantage of the bargains like there were during that, second and third week of March of this year.
We'll have more with Josef Schachter right after the break.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Josef Schachter. Joseph, Q1 results, both good and bad. Why are we seeing so many impairment charges?
Well, with what happens is they take into account what the price is at the end of March, and with the price of oil, of course, being low, they have to evaluate the assets on their books. And if most of them were put on in a $50, $60 price environment, now the price of oil is lower than that. They have to take an impairment charge. Now, that impairment charge is an accounting charge that hits the books and hits the balance sheet, which, hits your equity component, which is a bad thing, because your book value goes down and your equity component goes down. But those charges can be reversed. If we get back to a sustainable price environment north of 60, even 50, a lot of those negative impairments can be reversed. So right now, a lot of people are looking at these results and seeing these impairments, and the ones that are also having debt issues, i.e. some maturities in the next year, that may have problems getting support by their banks because of their covenant issues, or there are ones that are in the queue to try to get federal financing. As you know, there's EDC and BDC financing for smaller companies. The government has now announced a program for companies, north of 300 million of revenues. And if the program is supportive of the industry, and the banks and everything can make it work out, then other companies could get the loan support that they need. But we also have seen more companies go into CCA filing, both private energy companies in the energy and the energy service sector, and we've seen, some public companies also take that route. It's pretty rough out there, and Q2 is going to be a nasty quarter. If we think Q1 results were bad, Q2 results are going to be much, much worse because, of course, the price where we are now, nobody can really make money unless they've got decent hedges on. And then Q3, the question is how quickly is the recovery? I'm hopeful by Q4 we're going to be looking at much higher prices, north of 40, but I'm concerned that the prices are ahead of themselves right now, and the speculators are jumping all over the price of energy, buying futures, buying leveraged investments in energy, and I think they're going to be taken to the woodshed. So I think people should be very careful here. As you know, I'm a bull by nature, but I think this has gone too far too fast, and I think as we roll over, because of concerns that, the number of cases of COVID pick up, they don't do more fiscal stimulus in the states because the battle is on over the election between the Democrats and the Republicans, or if we start seeing another wave in the fall, as you're hearing from the medical experts, that the count goes up of the number of cases and the number of deaths, I think that's going to be a depressant on the markets. And so I'm saying to people, hold off. The low that we saw in March is probably going to be tested again in June and potentially even exceeded on the downside. So hold off, hold some cash. If you're overinvested, get out of that extra overinvestment. And we've also started a new product that's complementary, and your listeners can go to it. It's called Ion Energy, so www.ionenergy.ca, and it's a weekly piece talking about the macro view, and we're using that as a lead-in to people seeing what our product is, and then become subscribers over time at the regular product.
We'll have more with Josef Schachter right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Josef Schachter. Josef, you have a subscriber webinar on Thursday, May 28th. What can you tell us about it?
Yeah, for subscribers, we're going to be having the webinar. It's 90 minutes to 2 hours, depending upon the number of questions that come in. And given the difficulties going on in the industry, the companies that are announcing impairments, we've created a new product that we call the SER Quality Scoring. Those companies that are successful, that'll be, and there aren't that many, that will be growing and be stronger. We have a B rating for those that are survivors that will come out of this okay, maybe with some problems on the debt side, but they'll come out of it. And then we have problematic ones where they have weak hedges, low ownership by management, debt maturity problems, no free cash flow, interest coverage issues with their banks, and they don't get the financial support. So the problematic ones. And so we then dive into what are the attributes of A and B and C. And in that webinar, we're going to go through examples of individual companies that are names that people own, in Canada, and names that we cover and some that we don't cover, just to show examples that may be on the bad side, and let people know that here's the reason and here's the risk you're taking. With these companies that are maybe overstretched balance sheets or other issues, high cost assets, and if you're not a low cost, producer of natural gas and oil, and you're not a low cost producer or service company where you have the equipment and the staffing and your pricing is right to survive, and a good balance sheet to survive. Some companies have a lot of debt in the service sector. Some companies have no debt in the service sector, or little. So you need to be able to, survive during these difficult times. And so we'll be spending quite a bit of that time on that webinar. So if people want to join the webinar, they need to go to the website and become a subscriber. And the easy option to test it is to take the quarterly subscription, and then if they see they like it over 3 months, then they go to an automatic renewal system, both for the annual or the quarterly. So when you go to the website, you'll see all the terms and conditions. And again, that's www.schachterenergyreport.ca.
Green Party leader Elizabeth May declared the other day, oil is dead. Is it?
Well, what is she driving? Is she driving an electric car or is she driving a gas-fueled car? Does she heat her home with natural gas or does she heat her home with solar panels? I think on both of them, you're going to say she's a consumer of energy. So it's bullshit. It's, these environmentalists just love to push their agenda. But then you ask them, okay, what are you doing? And they just shut their mouths. Like there's none of them that can take the high road and say, I am an environmentalist and I have the cleanest approach. I ride an electric bike, or, I have an electric car, or, I've got solar panel that covers all of my needs in the house. They're all hypocrites. And to me, the fact that nobody calls them on it, I think, is ignorant, and is also not fair for them to get away and get that media exposure with nobody coming and saying, okay, let's call the kettle black, and you're not prepared, and that doesn't happen.
Well, my question I always pose to her is, how do you get from Victoria to Ottawa? Do you walk? Ride a bike, a little push scooter? Do you have a bicycle? Do you take a dog sled? Do you ride a horse? How do you get there? And of course, there's no answer.
Yeah, and Al Gore in the States is the same thing. How many homes does he own? 5. How many private jets does he fly on? Like it's obnoxious to hear these people, get on their soapbox, and then nobody calls them to task and say, okay, live what you say. And if you don't live what you say, then don't say it, because you have no basis to be listened to. But I better get off my high horse here in Calgary.
Also, what's the impact going to be if people continue to work at home and aren't commuting every day? Twitter saying, for example, the folks they have working at home right now will be welcome to stay at home and work if they want to.
Yeah, gasoline demand is going to come down, in the long term in the OECD countries for, again, the, public transit, the issue of, people working from home now, using Zoom for conference calls and meetings. So yes, we're going to see a weakening in demand. But when you go into, South America, Asia, Africa, most of those countries really don't have that capability of doing it, because the work they're doing is more blue collar, it's more manufacturing, it's more agriculture, and so their economies will continue to be needing to use more energy, especially in transportation. Think about it from India's point of view. India wants to be able to increase the the benefits, the economic benefits for their farmers, which means the farmers need to have motorized equipment, like we have farming in North America, and they need to have the ability to bring their production of whatever grains or corn or farm animals to the markets, which means the big cities. And so that transportation boom in those countries will continue. So while we may see demand fall off, 1 or 2% per year in North America, because of COVID and the changes in the way we operate, the demand, once we get past COVID, once we have a cure, we'll probably see demand grow by 1 million barrels a day per year outside of the OECD, while the OECD does show declining usage. But even in the OECD, there's going to be more usage for plastics. We use, in petrochemicals, we use more. There's going to be more usage, hopefully, airlines to take off, more use for diesel for trucks. So we're going to see, maybe gasoline demand come down, but it'll be offset by incremental demand in other areas, so that the net for North OECD countries will be flat, and the economic growth of 1 million barrels per day happens in the non-OECD.
Joseph, thank you so much for chatting with us.
My pleasure as always. Thanks, Jim.
My guest has been Josef Schachter, founder of the Schachter Energy Report online at schachterenergyreport.ca. He was speaking to us from Calgary. If you have any questions for Joseph or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.